Okay, then just to talk about cash flow. So we've talked about what goes into your P&L and what goes into your fixed asset, into your balance sheet. So then if you just think about the actual cash inflows and outflows of all the different transactions. So purchasing your asset, there's an outflow of cash. Depreciation and appreciation of assets, that's a non-cash item. It never hits your cash flow. And then disposing of an asset, you're getting your money in, so it's a cash inflow. And then in industry, I guess, in the real world, we need to consider the cash needs of the company when planning capital expenditures and disposals, and the involvement of the board is necessary. So when the company decides to purchase an asset for £1 million, we need to know whether we have that cash available and whether it's a good business decision, I guess. And it's just important that we always know where we stand with cash, so that we have that money there. And then just briefly, in industry, there's large volume of transactions, so it requires detailed and accurate record keeping. So fixed asset records are needed for the following: reassurance for the shareholders over the custody of their valuable assets, because obviously who's going to be interested in what's in the books? It's the shareholders that actually own the company. So even from like a historic standpoint, they want to know what our assets are standing at. Financial reporting, so for month-end annual accounts and audit and tax returns, there's actually fixed asset being such a big number, like the amount of money that you spend on fixed assets, it comes into so many different things. So audit and tax being another, as well as what I talked about earlier, month-end and annual accounts. Monitoring your performance, so your return on investment. So if we own a pub in London and it's sitting in the books at 200 grand, we want to know what money is that actually making us as well, so the return on your actual investment. So for internal management decisions and strategic planning, so what I mentioned about the management making decisions of whether to buy more fixed assets or whether to sell our fixed assets, and it all kind of comes together when you look at your cash and when you look at your financial statements, I guess, and where we are. Setting budgets for the company. And then insurance reasons, we need to have accurate records, and for banking arrangements. So that's just, like, we need to have good record keeping, basically. And that's it.